Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, on this day in 1945, America dropped an atomic bomb on Hiroshima.
Yes, it did. And it seems like every day for the past couple of years, another bomb drops every day. Not atomic, but another bomb
Ugh.
drops every day. Doesn't it seem like that a little bit?
Well,
Um,
of course, we're thinking about the Manhattan Project
yep,
and just how the world changed after the dropping of the atomic bomb more frequently now because there's so many parallels with AI. And now we're reading these stories, seemingly every other day about how some AI agent escapes its, sandbox and is manipulating
yep.
things. And so, I don't know if that's the right analogy. I mean, we're human beings, and so we're always seeking analogies and trying to put things in context. But I think a lot of folks are, and obviously kind of Demis Hassabis and a lot of folks who are pioneers in AI have also reflected a lot over the years on the Manhattan Project and
Yeah,
the atomic
the
bomb.
analogy, I think the analogy is apt. I was actually reading a story about the first nuclear device that was detonated in space. And that was, and nobody knew what was going to happen, right?
Yeah.
And there are still ramifications of that are floating around. But yeah, and what I mean by that is, AI is kind of the same way. We don't know what the
We don't
lasting
know.
effect is of a lot of things, and it could be decades in the making. Um,
And just like atomic energy, it can be used for good, and it can also be used for evil,
yeah,
right? Um,
absolutely.
so on that somber intro there,
That is a rather somber way to start.
that somber intro. Well, I wanted to kind of throw out some. We like to talk about history on this show,
We do we do talk about history a lot.
and put things into context. 'Cause if you're just in the day-to-day stream of news, you kind of lose sight of some of that stuff, right? And so we'd like to put things we talk about on the show in perspective.
I agree. I see people walk around with their phones and in their phones in the car and all that kind of stuff. And oh, I'm getting news. I'm getting news. It's like, no, you're just getting fodder.
Yeah, you're getting
And
dopamine hits.
it's being
Yeah.
fed, and it's being fed to you. By the way, you're not finding it. It's being fed to you. So it's problematic on a number of levels. You know what I noticed, Lee? Not too long.
Do
These
tell.
are my observations, Jimmy observation.
Well, we like them.
People do not drive around with their windows open anymore. I if it's under 95 degrees, my window's going to be open. I'm
There you
driving
go.
around. I want to smell the outside. I want to hear
Well, you
things.
got the long hair. You got the long hair, so that probably feels nice.
Yeah,
Let's
maybe, I
get
don't
that.
know. But
I think if
I
I had
like.
that mane, I might drive my windows down more often.
Maybe, I don't know. I mean, you have to keep the kids in the car and all that kind of stuff, and keep people comfortable. I don't
Well, they
mind.
love the windows down. They
Do
want
they?
to. Oh
Usually,
yeah,
I
I do.
just
Well, I mean, I
I
have a
think people
sunroof, so
encapsulate themselves way too much.
for sure
The fastest
encapsulate
growing
themselves.
demographic in the U.S. are single men that have no plans for marriage. That sounds like the worst existence in the
No
world.
plans? What does that even mean? Like, well,
No plans for marriage. I mean,
I didn't have
this
a
was a
plan to
poll
get
that was
married for the
done.
longest time, and then I met my future
Then
wife.
you met
So,
your wife. I mean,
um,
but yeah,
you
I
mean
think
like people who don't think that'll happen to them?
yeah, I think that's yeah, and it just seems like people encapsulate themselves more and more and more doing things online, getting groceries delivered, getting your food delivered. It's like people
Got to get out there.
open the door, go outside,
Talk
talk
to
to
a
somebody.
human. Talk to someone.
I mean, it's
Roll your
insane to
roll
me.
your windows down. Okay.
I roll your windows down.
Turn up the Van Halen.
Yeah,
Right.
has some
And
Van Halen, had some Kenny Chesney going
there you
yesterday.
go. Get some No Shoes
Um,
radio. Get the No Shoes radio going on Sirius XM, and talk to someone. Ask them how they're doing.
yeah, I
Say, hey,
mean,
you want to grab a drink?
I'm all about that. I mean, you and I talk all the time offline. I would much rather pick up the phone and call somebody than text them.
There you
I do
go.
it often. Sometimes people pick up, sometimes they don't. But I don't know, this encapsulating yourself more and more and more. I just think it's just really bad news. People become more
It's
and
not
more
good.
susceptible to fewer and fewer influences when they do that.
Well, you're in your car, you got the AC going, you're listening to, some knucklehead like, Joe Rogan. Not like I don't have anything against Joe Rogan. I listen to him occasionally, right? But then, they're obviously, giving you content that is going to hook you, right? I mean,
Right.
they're not talking about boring, mundane subjects, right? It's like, this person's trying to screw you or this conspiracy, whatever like that, right? And then, kind of people go down this, this spiral, right? Where they
Yep.
become more and more isolated, more and more prone to believing in absolute nonsense. I mean, we kind of talked, one sort of example of this is the central bank digital currency kind of conspiracy thing that we
Yeah.
talked about, right? So
Yep.
yeah, so I'm with you. And Jimmy, really, I think what you've described is sort of the digital assets that do antidote, right?
Hmm.
Hey,
Absolutely.
let's get together and have conversations. You're not going to
Yeah.
be lectured to,
Nope.
right? You're going to have a conversation. You're going to listen to a great conversation on stage. You'll be able to
But you're going to be part of the
participate.
discussion.
You're going to be part of the discussion, and everyone's accessible too. It's a small group, so you're not going to be able to sort of hide in the background, even if you want to. Someone's going to come up and strike up a conversation for you. So we teased last week that we do have dates selected. Obviously, we're going to be trickling out more information in the coming weeks, but February 10th through 12th, 2027. And with that, we also wanted to let folks know that, as always, right, we need and are seeking sponsors, right? This
Yes.
conference would not be possible with out sponsors. We do charge a fairly modest attendance fee, but that fee doesn't come anywhere close to covering our costs,
Oh,
right? So
absolutely not. And
the
we're at
comp,
break even. We're not. This is not a for profit. We're just looking
no,
to break even.
yeah, we're just looking to cover our costs so we can keep doing it the next year,
Yeah. Yeah.
right? Because obviously, if we're not covering our costs, then we can't do
No,
it.
we should say that unfortunately, golf sponsorship is already taken this
Golf
year.
is taken. Golf
Taft
is
has
taken,
already
but
taken that.
but we have multiple tiers. We have
Multiple other tiers.
platinum, gold, silver. So if your organization is interested in sponsoring, being affiliated with a great academic-oriented conference that brings together a diverse group of people, right? This is not,
Yep.
again, the whole premise is this is not your crypto bros gathering, right? This is a place for people who are doing real work, want to have fun, right?
Yeah.
We're not going to say there's no fun. I mean, there's a lot of fun,
A lot of fun.
right? So give us a email, okay? Jimmy.lens at duke.edu, lee.reiners@duke.edu. If you're interested in sponsoring, we'd love to have you be part of the
We
Digital
are
Assets at Duke team.
we are really looking forward to this year, our fifth conference,
Yeah,
which will be a lot of fun here. I think that it has kind of grown to be known as a fairly serious discussions. We always, as you said, we always have fun, but I think the topics that are raised are topics that kind of lead the industry in a lot of
yeah,
ways. I mean, if that we were some of the first people to talk about stablecoin yields before stablecoins paid out yield. We were talking about some of the derivatives
tokenization. Yeah.
before derivatives floated. We talked about ETFs before ETFs started. I
Mm-hmm.
mean, these were people who are leading these different projects,
Yeah.
and so from industry, from the regulatory side, from founders, there are a
Yeah.
lot of interesting people that show up. I always enjoy it because it does bring together such an interesting group of people, and
Oh,
you just
yeah.
never know who's going to show up.
Yeah. It's like the one crypto conference that crypto skeptics are welcome at, I would say,
Yeah,
right?
absolutely.
Where you don't have to be drinking the Kool-Aid to come to learn, to ask hard questions, right? I mean, this is something
Yeah,
that we have to warn our panelists about, which is, look, if you're
nothing's
going to
off.
agree,
Nothing is off
if
limits.
you're going to agree to speak, we're not going to shield you, right? I
No,
mean, this is not a platform for you to just repeat your talking points,
no.
And I think that makes for a lively conversation. Although some folks, aren't up for tough questions, but we're all about it. So, Jimmy, one of the highlights, well, there's a lot of highlights of the conference, but
Yeah,
the last couple of years, actually from the very beginning, we've always had a panel on blockchain security and investigations. Okay,
yes, we have.
and
Ari Redboard
that has been moderated by our good
has
friend Ari
moderated that
Redboard,
several
who needs
times.
no introduction. Anyone who is remotely involved in crypto, of course, knows Ari and
Knows
has
Ari.
seen his name. Any sort of article involving money laundering or sanctions evasion with crypto theft or hacks, seems to have a quote from Ari. But the last couple of years, because you and I, you in particular, are also very, security focused, cybersecurity focused.
Mhm.
And so we've had Brett Falk from Penn, a cryptographer from Penn in the comp sci
Yeah.
department over there.
Great
Uh,
speaker. Great
great, great
speaker.
speaker. I think just emblematic of the quality of speaker we have at Digital Assets at Duke, because he's like literally no hype,
Yeah.
but just the facts. And he has talked about quantum computing.
Mhm.
Okay. And the threat that quantum computing poses to the fundamental cryptography underpinning, cryptocurrency, but all, really, kind of all RSA elliptic curve
Oh, absolutely.
cryptography, and we'll
Absolutely.
talk, and we'll talk, and we're going to go there, but we're going to talk about kind of what makes crypto sort of unique and sort of maybe more at risk. And so when Brett has talked about this, it's you could hear a pin drop in the audience. I mean, people were so transfixed, right? And we decided, you and I, a few weeks ago, actually, that you know what, this year, let's do a standalone quantum session.
We are.
Okay.
Yeah.
We're going to do a standalone quantum session. We're going to strip out this kind of the security from the investigations piece. And investigations obviously still important. So don't worry, Eric, if you're listening. But we're going to do a standalone quantum piece. And, and that's because really the trickle of news has only grown when it comes to quantum. And we've covered, some of the bigger announcements as they've come out. But this week, Jimmie, the CEO of IBM went on Jim Cramer's program on CNBC.
Yep.
And, Cramer was talking to him about quantum because IBM has invested heavily in quantum. Last week we talked
Sure.
about IBM selling all their blockchain patents
All
to
their
Circle.
blockchain patents, crazy, right? 1,000 blockchain
1,000
patents.
blockchain patents. And, one of the questions I asked you was, well, why wasn't IBM able to make better use of these? And you gave a great answer. One thing we didn't talk about is that, IBM is really, I don't want to say putting all of their eggs in the quantum basket, but they're putting a lot of their eggs
Yeah.
in the quantum basket, right? They have invested heavily in developing a utility scale quantum computer that they would then, presumably be able to lease out to clients. And, Kramer asked him, what does this mean for crypto? And the IBM CEO was basically like, look, you got about 3 to 4 years, before the
Yeah,
underlying
I don't know if that was
cryptography.
the wrong question or the wrong answer. I'm not sure. I mean, obviously, it was a very loaded question because he asked, "What does it mean for
Yeah.
crypto?" He should have said, "What does it mean for finance?" But
Yeah.
obviously, Kramer has an angle that he's pushing. It's fine,
Well, I
He's
mean, I don't know if he's
uh,
got an angle, but
I get
the angle is he's a
he has a
TV
steam.
personality.
Yeah,
Yeah, and he wants to be entertaining, right?
yeah,
So the next day after that interview, I think it was the next day. Anyway, Kramer's back on air, and he says, "Look, I'm selling all my Bitcoin because of this
yeah.
this quantum threat." Now, of course, folks on crypto Twitter were celebrating this because Kramer is notoriously an inverse indicator, right? So whatever he says, if there's actually an inverse ETF for Kramer's pick. So Kramer recommended the stock, right? This ETF would short it, right? If he said sell a stock, the ETF would go long. It actually closed down, but he's kind of got a reputation. And look, and to his defense, Jimmie, if you and I were on TV for multiple hours a day talking about stocks
We
and
got to
picks,
come up with
most of
something.
those, yeah, like you got to talk about something,
Yeah,
and you're probably going to be wrong, most of the time, right?
yeah,
So I'll extend a little bit of grace to Kramer. So anyway, Jimmie, look, that Kramer unintentionally, of course, set me up here because I have a new paper on
yeah.
this subject. And I'll put it in the show notes. I have a blog post that kind of summarizes the paper. Now, this is a working draft, and I wanted to talk about it because I actually am in the process of soliciting feedback on the paper. So I welcome all of our listeners who are interested in the subject, know a little bit about it, to chime in. And the thing that struck me, Jimmie, the kind of the way I framed the paper is that the federal government is sort of on two conflicting paths, right?
Right.
And on the one path is they are clearly aware of the quantum risk and leading into it. So right before July 4th, this did not get a lot of attention because of the holiday, but President Trump signed 2 executive orders related to quantum. And the
Yeah,
first was all about investing in quantum and actually wanting one of the federal labs to develop a utility scale quantum computer. And the second was about migrating, high risk or, kind of critical federal government IT systems to post quantum cryptography,
yeah.
right? And they moved it up to 2031, basically the end of 2031 was the deadline there, and that was 5 years sooner than a kind of a previous government edict
Yeah,
on
yeah, it
that. And so
was.
that I thought
It definitely shortened the
that
time
was
frame.
pretty yeah, to shorten the time frame, that was pretty telling. And along with that, we've seen moves from crypto players. So Coinbase, has developed a post-quantum roadmap, and they say, look, a quantum computer's coming. They have an advisory board. There was a new consortium that was recently created, including Strategy, right? And they obviously own a lot of Bitcoin. That was all about thinking about moving Bitcoin to post-quantum cryptography. So so people are aware that this is a real risk.
It's
On
very
the
real, and
other
it
hand,
goes way, way, way beyond crypto. Way beyond
and we'll
crypto.
talk about that. We'll
Yeah,
talk
yeah.
about that. On
Okay.
the other hand, you have Paul Atkins, as we talk about all the time on the show, going on CNBC, going on crypto podcasts and boldly and proudly proclaiming that, capital markets are moving on chain, right?
Uh huh.
Everything's going on chain. And including chains, right? That, Ethereum, others that are vulnerable to a quantum computer. And so, Jimmie, this is all setting up for you to
Yeah.
kind of talk about, kind of the broader issues. Why why crypto? Why are we talking about crypto and not necessarily other IT systems? Well, because as we all know, crypto is decentralized, right? I mean, so there are post quantum signatures. And folks, just to give you kind of the short end of it here in terms of the risk, because we're going to talk about the hard wallet, right? The
Yeah.
Coinkite hard
Oh,
wallet
we have to
breach.
talk about that. We
Uh,
have to talk about that
we're
later.
going to talk about that. Don't worry. We're going to talk about that. Don't worry.
Yeah.
But obviously, as you know, right, not your keys, not your coins, right? Your
Yep.
private key is how you sign a crypto transaction. If someone has your private key, then they can move your crypto to
Right.
whatever address they want to move it to. Now, the way that crypto signatures work and the cryptography works is that no one who has your public key can use that to figure out your private key, right?
Yeah.
Yeah, quantum could and will solve that. So
It could.
with a quantum computer that's functional, if your public key is known, the person with the quantum computer can use that to figure out your private key. And then once they have their private key, they can move your crypto wherever you want. And it's not
Yeah.
just a Bitcoin risk. A lot of people talk about in the context of Bitcoin. It's Ethereum, it's other chains as well. And there's different types of attacks, and I detail those in my paper in the Google. And this is all spurred by this great Google paper that came out earlier this spring. So, why are people talking about this so much in the context of crypto? Well, because with crypto, there's no centralized entity. That's the whole point, right?
Yeah.
So presumably, banks and other institutions that rely on the same cryptography or variants of the same cryptography have the resources and the incentive, right, to upgrade their systems to post-quantum cryptography. But particularly when it comes to Bitcoin, right, that's like herding cats. I mean, that's a decentralized system. So there's a lot of concern that the Bitcoin core developers are not going to move in time, and there's not a consensus. And this is another issue, right? I mean, there's not
There
an
is not a
agreement
consensus. Yeah.
on what to do. But I think you wanted to make the point, Jimmie, that this is not obviously just a quantum risk,
Absolutely
that
not.
this is
Yeah.
an entire sort of financial system vulnerability. But I do think that the financial system is aware that this is a coming vulnerability.
I think they're aware. I don't know. I don't know if they have an awareness of the immediacy, and not that it's going to happen tomorrow. But if you're talking about major financial institutions, these are still operating in an environment that was designed 20, 30, 40 years ago. Nothing happens
Yeah.
quickly, and so being able to and folks, almost every kind of transaction that you do involves public key cryptography. It's not just crypto. It's almost everything that you do involves public key cryptography. When you access your bank, when you access online banking, all those kinds of things are involved. The one thing I would say that traditional financial institutions have is a governance structure that would permit them, as you mentioned, it would permit them to make these changes in a
Yeah.
decentralized environment like Bitcoin. There is no authority that can say, there is no CEO that can say, we're doing this in 6 months. All right. So I think that is one of the things that is, maybe misunderstood, that every system is vulnerable to this. And,
Yeah.
it's when you expose a public key, those can be recorded, right? Those can be kept. And so it's not just things that happen after a quantum state. I can guarantee you that people are recording that right now, right? They're saving that. So when quantum does
Harvest now,
become
decrypt later.
absolutely, you could do this years down the road. You could access these, or you could attempt to access these. And I think it is still a little ways away, but it's out there. The other thing I think around this is because people are saying, well, yeah, but more stuff's going online. They're tokenizing things, and tokenization actually helps this because tokenization is permissioned. So that's a big difference. In almost all cases, tokenization is a permission type thing. And so it isn't vulnerable in the same way. And so things that are being designed now, I would say, are somewhat being designed, and maybe this was overt, maybe it wasn't, in a way that is almost post-quantum, hardened at this point, right? The tokenization, the permission side of it. But things that expose public keys, which is almost everything that we do, whether you know it or not, it is. Those are all very vulnerable to these kinds of hacks. As I said, the big difference is financial institutions have central authority and central controls and governance.
And regulators.
But that means you have to be able to move on it. And just because you know about it doesn't mean you can move on it. And honestly, Lee, I mean, what I probably worry about more isn't, the large banks, right? The large clearinghouses, things like that. They're in pretty decent shape and they're aware and stuff like that. It's all of the small ones. And remember, when you see hacks of major organizations, and I'm going to go back to one that's like years old now, but it provides such a great example. The Target hack, when that occurred, and all hell broke loose with Target. Where did it come from? It came from a refrigeration company that they used for their coolers or something like that. I mean, it was crazy. But those are the corners, and that's what I worry about more. It's not the large financial institutions; it's the small ones that maybe don't have the capabilities that are still plugged into the financial system. That's where I think the biggest vulnerability is right now. Certainly, there are things as I mentioned, in the crypto space because of the lack of central governance. But I think this is not a crypto problem. Even though Jim Cramer made it one, it's not really a crypto problem. It's a financial systems issue.
Yeah, it is a financial system issue, and there is at the G7 level, working groups dedicated to this. So I think again, the main point is that the traditional financial system has the means to address it, right?
Yeah.
So it's a problem. It's a threat to everyone, right? It's just the fact that because of crypto's decentralized nature, it's a lot harder to migrate. I mean, you and I were talking before we hit record about, look, any sort of modern financial institution is the result of probably numerous mergers that have occurred before the years. Over the years. And so, you have to, one of the first kind of steps you have to do as an institution is inventory, right? Your systems, right? Where are we using cryptography? You might not even realize it. And so that's kind of step one. So, and of course we have AI supercharging all this too, right?
Sure.
So we kind of have AI and quantum feeding on one another, right? AI will sort of identify, okay, where are they using, RSA cryptography, elliptic curve signatures, and things like that, and then harvest now, decrypt later once you have a quantum computer. So there are so many interesting aspects to this, scary aspects when you think about it. I just think it's telling that from a financial regulatory standpoint in the U.S., it's all, hey, rush into tokenization, into using blockchain. And it's this, and we've seen this in other contexts with the Trump administration. The sort of the left hand is not aware of what the right hand is doing here. And even the Clarity Act, and by the way, folks, no updates there, so we're not,
no updates here, and we only have
no updates here.
A day left,
a few days, a day left. So the markup, there was no language around quantum until it got passed out of the Senate Banking Committee. So someone, and I don't actually know who, I don't know the full history here, so maybe a listener can fill me in here, but there was some office that apparently is aware of this issue and did introduce an amendment that got attached to the current version of the Clarity Act around quantum. And the language basically says, yes, quantum is a threat. And then, all it does is encourage NIST to cooperate
Yeah.
with, DeFi and crypto developers to migrate, which of course, there's nothing stopping that from happening now, right? So it's effectively toothless. And so, kind of the point of my paper is, well, what should be the policy response here? Because a lot of the literature and the discussion thus far has been on the technical side, Jimmie.
Hmm.
Frankly, none has happened on the policy side. So that's what I'm trying to bring to it. I have a recommendation. I don't, I think it's right, but I would certainly encourage folks to take a look and stress test it, which is basically say, look, the federal government can't mandate that, Bitcoin core developers adopt post quantum cryptography, right? Like that's just even if they could mandate, even if they did mandate that, there's no way, that they could enforce it, right?
Right.
But, obviously they do have oversight over regulated intermediaries. And so sort of you essentially put up a barrier and say, look, if you're a regulated intermediary, be it a broker, an exchange, whatever it may be, you can only interact with blockchains and protocols that are certified, as post quantum. And there's a certification process. So folks should take a look at that if they're really interested in this subject. But this is going to become increasingly more of a problem.
Yeah.
As I think as we see, because there's research labs putting stuff out. Eventually, as we get closer to what they call Q Day, Jimmie, which is the term for when we actually have in place a functional quantum computer, no one's probably going to announce it, right? That hey,
Yeah.
we've done it, because I mean, let's face it, it's governments that are competing here by and large, right?
Oh, absolutely.
It's like the
Absolutely.
NSA, and the reality is that the entity who, whether it be, and look, it's China and the U.S. probably, okay, maybe
Probably.
Russia, but it's probably China and the U.S. So they're not going to put out a press release saying, "Hey, we've,
We're ready. We got it.
we're ready, we're got it." And look, the first entity who has a quantum computer, it's not as if the first thing they're going to do is go out and steal Satoshi's
You
Bitcoin.
don't think they're gonna be advertising the fact?
They're not going to be advertising it, because there's tremendous signals intelligence,
Yeah.
right? I mean, you can basically, unlock tons of secrets. So it's not as if like crypto is going to be like the number one priority.
Yeah.
As I lay out in my paper, though, like, look, and there's a lot of game theory aspects to this, because China, for instance, right? Remember for the longest time, people were concerned about, if there were some conflict between the U.S. and China, China could just dump all their treasury securities,
Yeah.
right?
Except for they've already done that.
Well, I mean, they've done it slowly,
Yeah.
and of course, the retort to that was, well, why would they? I mean, they would suffer losses. Like, why
Yeah.
would they do that to themselves? And I kind of analogize to that with the quantum and crypto issue, because China has effectively made crypto illegal for a number of years now. So, if they really wanted to get at the US, and they had a quantum computer, it actually is not inconceivable that they would just tank the crypto markets by, stealing all the dormant coins or whatever it may be, because they're not going to be exposed. So, a little interesting thought experiment for folks. Take a look. We got to wrap our heads around this. We have to start moving now. We still have time, right? But
Still have time,
we still have time, but
but
we need to
it
start
is it
proceeding with
should
a
be at the
sense of
forefront.
urgency. Yeah,
It should be at the forefront of a lot of discussions. I'm glad that it did make it into clarity, even though it's not very significant. I do think HFS and Senate Banking Committee, this should be on their list of top
yeah,
priorities. They should be
yeah.
thinking about this. I mean, to me, it's just like any other vulnerability in the financial system that we think about. And I mean, honestly, Treasury, places like that, they should be this should be
Yeah.
this should be front and center right now. The advances in AI, the advances that we see in computational technologies, to me, would push this further or closer rather than further
Yeah.
down the road. You have to think. I mean, we see a lot of things in the quantum space that are being done. We see quantum time being rented out on AWS. I mean, it's not like quantum computers aren't out there. They're not at this stage yet, but it's not like they're not out there and they're not being used, right, for a lot of
Yeah.
different purposes, mostly marketing and sales and stuff like that. But could they be? It's fairly easy to go down a different path. And as this development occurs, as things happen, I mean, they tend to happen in not in a linear fashion, right? It happens,
100%.
and so that's probably the bigger, I would say it would be the bigger concern or the bigger
100%.
issue. Yeah.
Yeah. I mean, you're a historian of technology. not an official historian, but
Not an official
you're
historian.
not
I
an
am.
official
I
historian,
am. I
but
am. I'm a student of of
you're
that.
you're a student of technology, and you're absolutely right. I mean, the nature of these things is not linear; it is exponential, and I think
Mhm.
AI is a perfect example, right?
Yeah.
Because for most of us, it seemed as though sort of AI just got dropped, out of outer space into our laps in 2024 when ChatGPT was released, and then we're all using it, and we're like, oh my god, right?
Yeah.
But of course, there has been AI research and developments going back to the 1960s. I mean, going back to Alan
Sure.
Turing, right? I mean,
Yep.
so, and a lot of folks just thought, AGI was like, one of those things that was, it was like 10 years away for like, the last 50 years, something like that,
Yeah.
right? And I think that's an interesting way to think about quantum, right? I mean, people have been talking about quantum a long time, right? A lot of people have been dismissive in the same way that they were dismissive of AGI, and then boom, one day we could all wake up, and then all the cryptography underpinning all of our critical systems is vulnerable,
Yeah.
right? And that would just be a very dark day. All right, Jimmy. Well, let's talk about a dark day for thousands of cold wallet holders.
Wow,
Okay.
this
Uh,
was a huge deal, and I have to tell you, I was my one of the professors at Duke brought this to me the yesterday. Reed
mhm.
Timsio and I were talking about this and kind of how big this is and how prolific it is, because this and what makes this, and I'm going to let you give the
The
summary
overview.
of it, but what
Yeah.
makes this so prolific to me is that this was kind of the holy grail. This was the safe
Yeah.
place. And so think about that. Safe place. Lee, tell people what we're talking about here.
Okay, so the company is called Coinkite, and I have to admit I had not heard of them previously, but they made Bitcoin cold wallets. Okay, and cold wallets, for those of you who aren't aware, have physical hardware associated with that with private keys, right? So it's a way to secure your crypto, right? And the whole point of what makes it cold is that it's not connected to the internet, or not supposed to be connected to the internet, as opposed to a hot wallet, right? So hot means it is connected to the internet. All right, so this is a physical hardware device designed to keep your private keys, which, as we just said, controls access to your Bitcoin, secure. So hackers, Jimmy, absconded with more than $100 million worth of Bitcoin from thousands of these Bitcoin cold wallets hosted by Coinkite. Okay,
Yep.
roughly 5,000 wallets. Now, the hack happened due to a flaw in the software that the cold wallets used to generate a seed phrase, right? So the
Yep.
seed phrase basically was, the phrase that you use to access your wallet, right? To
Yep.
access your private keys. Now, and this is not uncommon, right? Most wallets, a lot of wallets use seed phrases.
Sure.
Um, they are supposed to, the way it's supposed to work is that it's supposed to be randomly generated,
Yeah.
right?
It uses
Apparently,
a
the
very high
hacker
level of security in
high
generating
level
these.
security to generate the seed phrase. Apparently, the hackers using AI were able to identify the process by which the seed phrases were um, generated, and then guess them themselves, right? Come up with
Right.
the seed phrases, and then once they had the seed phrases, then they had access to everyone's wallets, everyone's private keys, and not everyone's, but a lot of folks' private
Yeah.
keys, and then they could move it. And I think you're right, Jimmy. I mean, the takeaway is, cold storage hardware wallets were, deemed to be the gold standard. If you were going to do self-hosting, if you were going to custody your own Bitcoin, right, this was generally viewed as the most secure way to do it. And I
Yep.
want to end on this quote from a guy who lost, over $1 million. And I thought this was really telling. He says, and this is the end of the article from Bloomberg, we'll put in the show notes as we do always. He says, if it really is this complicated and technical, perhaps it's not worth doing. Nobody knows how basically anything works. So, Jimmy, take it away. What are your reflections here?
Wow. Yeah, there are a couple of things. One, I think that it became obvious when people started looking into the company that they weren't actually using the level of cryptography they said they were. And how do you validate that? How do you verify that? Man, it's really hard to do that for just the normal person who is thinking
Mm-hmm.
about this. And so I think that goes to a couple of things. It goes to, as you said, you've never heard of this company before, yet they were selling these, and a lot of people bought them.
Mm-hmm.
You have to
Had
be
you
able
heard
to
of them
check out these.
before?
Huh, pardon?
Had you heard of them before?
No,
Okay.
not before Reed told me about it. So you have to be able to check these out a little bit. You have, and I was funny. It
But
was like here's.
how? Like, how do you know? Like, how do you check? Like, what
I
does
think
that
you
even
have to
mean?
go
Like,
with
check them out.
you
Like,
have to go with the
if
proof.
you want to do self custody in a hardware wallet, like, what questions do you ask? Like, well, how do you probe this?
Yeah, I think you have to ask for a third party has to have validated the level of security and things like that. You can't just go on people's
Yeah.
word
Yeah.
for these kinds of things. But for for this one in particular, I mean, even I asked Reed, it's like, so where are they headquartered? Well, it says it's a Canadian company, but nobody really knows.
Yeah.
Okay, so we don't know where they are. There was no validation of the security on these things, and I mean, there are questions. Who was the one who hacked these things? Who did it?
Mm-hmm.
I mean, I'm just saying, was it an insider? Was it an outsider? Who was it? The level of security wasn't what it was supposed to be from all indications. And so I think that what's happening to me, what and we saw this on social media. What were people doing? They were immediately moving their stuff to exchanges.
Yeah.
Um,
Yeah.
as soon as fast as they could, people were moving stuff to exchanges, and so exchanges are becoming the de facto depositories of this kinds of things,
100%.
or other. I'm saying exchanges. They're up to custodians. But they
Yeah.
are becoming the de facto bank that seems to be a safer alternative than putting the money under your mattress.
And I mean, of course, there's just its story is so rich with irony, right? Because this is
Yeah.
the Satoshi vision, right? I mean, this is, people don't talk about it anymore, but in the early days of crypto, right, the selling point was like self-sovereignty, self-custody,
Yep.
peer-to-peer. You own your wealth. And, all the trend lines are converging, Jimmie, towards greater centralization. People don't want to have to worry about this, right? This is kind of
People don't.
this has always been one of my critiques of crypto and the crypto industry is that, it is filled with intermediaries,
Yep.
right? And for good reason, because people don't want to have to deal with their private key storage. I mean, how many stories crypto history is littered with these stories. Remember the guy in England that, had the thumb drive thrown out and then was trying
Yep.
to buy them. $500 million, whatever, and he was trying to buy the dump, and he raised investors to try to buy the whole landfill and whatnot.
Yep. I remember.
I mean, there's just so many stories like this, and
There
now we
are.
have AI, and now we have powerful AI that is going to make finding exploits a lot easier for people who don't have as much technological sophistication
Well, I think just
as
in
sort of
general, I think
prior
you could have stopped at finding exploits because I mean we're
finding
seeing
exploits.
that
Yeah,
right and
and then
left.
same thing with quantum, right? Because
Yeah.
obviously, like the exchanges are going to be able to migrate to post quantum cryptography.
Right.
So everything is just moving towards, if you want exposure to Bitcoin or if you want exposure to crypto, do it through an exchange, and maybe you don't even do it via spot crypto, Jimmie, right? I mean, maybe
Right.
you do it via perps. I mean, perps don't even use blockchain to my knowledge. Like on Kalshi, like I don't think Kalshi uses blockchain at all.
No. No.
And you can get exposure there. You can get exposure to an ETF. Now, even with an ETF, there's still, a custodian that should have at least the crypto,
Right.
and
But those
that's
custodians
Coinbase, right?
are, I mean,
So,
they're validated. They use third party administrators and those kinds of things. I mean, those
oh,
are
there's
just like
audits. Yeah,
mutual fund
exactly.
or
So,
anything like
yeah,
that.
I know. So, like my point is that, like, I think going forward, everything is I said, moving towards greater centralization.
Yeah.
People not wanting to have to worry about, gosh, is my hard wallet, my secure and whatnot. So, wild story. Obviously, feel bad for a lot of people who thought they were doing it right, Jimmie.
Yeah. 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 I do feel bad for those people who took the extra effort and took the extra time and did this because it's not easy, right? I mean, you really have to go out and start learning a little bit to do this. It's not
No,
like just opening up an account at at Coinbase. And so now we're at this stage where I think everybody who has this kind of storage device is going to be second guessing it. I've always thought this was. I
for
mean,
sure.
this was always a. I think it was always a risky proposition to do something like this for a couple of different reasons. I mean, as you
Hmm.
said, you can lose these things. You can lose your seed phrase. You can, a million things can happen. And you heard all kinds of stories. Remember, people used to have like seed phrases engraved on metal and put in a safe and all kinds of things like that.
Yeah.
So it couldn't be. You know, the the difficulty of doing those kinds of things, I think,
Yeah.
push people into that centralization kind of area. And now we're seeing that, maybe the centralized place that has the money to actually put all the controls in was the better one all along.
Makes sense. Well, I
Yeah.
want to end on a story, Jimmy, kind of related to what we were just talking about, which is getting exposure to Bitcoin without having to deal with private keys and custody like that. Via ETFs. You and I have long talked about the value of ETFs.
Yeah.
And we've said, for years that, eventually, there will be indices, right?
Oh,
Crypto
absolutely.
indices. There are some. It hasn't really taken off, but most of the ETFs, and I know they're ETPs, and we don't need to get into the distinction
Yeah.
there.
Yeah.
But they're single coin, ETPs, right? So
Right.
there's the Bitcoin ETP, there's the ETH ETP.
Ethereum, ETP.
Well,
Yeah. Sure.
so an interesting story from last month, Jimmy, and I've had it on the agenda for like the last three or four podcasts. We just haven't gotten time to it, but I wanted to get it in because it involves actually a former speaker from digital assets at Duke, Kathy Clay, who when she spoke a few years ago was at CBOE, and now she is the CEO of S&P Dow Jones Indices. Okay,
Mhm.
and obviously we're all familiar with the S&P 500. Well, they have partnered with Pantera Capital, Jimmy, to launch a new crypto index. And the headline is that it excludes
No.
Bitcoin,
Yeah.
right? It excludes Bitcoin. And the Kathy Clay said Bitcoin fails the index's core test, which is generating real protocol revenue instead of trading purely on speculation. Ooh, that's fighting words. The Bitcoin maxis ain't going to be happy with that.
No.
But here's how the index weighs its tokens. There's 18 constituents. Its five largest holdings are ETH, Binance Coin, Solana, Tron, and Hyperliquid. It weights holdings by market cap,
Yep.
rebalances quarterly. There are limits on how much of the index a single token can make up. But importantly, right, the tokens have to have verifiable economic activity, right? They can't
Yep.
just trade on name recognition alone. And so I think you're seeing that pivot. This has been going on in crypto markets for a while, which is, hey, we want exposure to income generating, right? Cash flow
Yep.
generating blockchains, tokens, you name it. And this index is designed to provide institutional investors, presumably institutional investors, that type of exposure. What do you think?
So, Lee, how long have I been saying that the vast, vast,
Long
vast
time.
majority of people in digital assets, you know where I'm going already, they're looking for something simple, yield. They're looking for really, really simple things. These are, the underpinnings of most investments are very simple, yield. That's all people were looking for. They got,
Mm-hmm.
they were, sometimes the yield was, questionably high, which I said always question. But in the vast majority of cases, all people are looking for is, basic investment, type returns. They're looking for
Yeah.
yield. And so the fact that, they went in this direction, I wasn't surprised. I mean, I was kind of surprised actually it didn't hit more people's radar, but I wasn't surprised because, I mean, that's what people are looking for. When people have investments, I mean, they're looking for what is my return going to be? How is my return going to be? If it's
Yeah.
yield, that's great. If it's capital markets appreciation, that's great. But I
Mm-hmm.
want something. I have to have something beyond just speculation. And hey, there's a lot of speculators out there, and I get that too. But that's what people I think are much more interested in. And it's been proven out in the crypto space, just like it has in traditional finance. You still have tons of people buying bonds, buying CDs, buying yield bearing instruments, and in almost everything in crypto that has gotten really really popular was yield farming and things along those lines
Yeah,
that
I remember
are
yield farming. Yeah.
yield bearing at the end of the day. I mean, a lot of those
Well,
things
this is the
were
whole debate about clarity and payment on rewards for
yeah.
stable coins, right? I mean, this is what, as you said, and first said for a long time, due credit to you, my friend. This
Thank
is what
you.
people want.
That's it. It's so simple at the end of the day. And so the fact that they are building an index that doesn't include a non-yield bearing security is like, yep. Why would you do that? Why would you do that? I mean, you can go out and buy, as you said, exposure to Bitcoin in either directly or indirectly. But if you're looking for simply an investment that is going to provide yield at the end of the day, here you go.
Yeah, that's right. All right, Jimmie. Well, we've gone over time, and there was a handful of stories we didn't get to, including a story about your old employer getting into the tokenized deposit game. I'm
Yes.
sure you have. I'm sure you have thoughts there. So I'll let you. Yeah, I'll let you stew on that one for the next week. But I am off to Michigan, to the shores of Lake Michigan for the weekend. But I hope you stay cool here in the steamy Durham, North Carolina.
Well, you have a good time up in Michigan. I know you'll have the family up there, and you guys will have a good time up on the lake. So have fun up there. Be thinking about us. We're getting ready. So can you believe it? Less than 2 weeks before orientation starts
Oh my
here
gosh.
at Duke. I am so anxious to see my new students. I've already heard from most of them probably. But
Nice.
yeah, a week and a half, and the new students start rolling in for orientation. So we'll talk about that a little bit more, but very exciting. End of the summer is here. Orientation is upon us.
It always goes fast, doesn't it?
It does. Have a
All right,
good
Jimmie.
weekend, Lee.
You too. Bye bye.